say if the stock now is $100, I don't buy like $120, whatever, right? That is just a 20% move. I prefer to buy very far out from current market, which is what which technical term is at the money. So at the money is where the current market is. Out of the money is very far out of the money, is far away from where the market is. And the reason is because the market consistently underprices wing outcomes, right? Meaning they consistently price 5 standard deviation outcomes much less than, because people tend to bootstrap outcomes, right? They say, okay, you know, the stock can go 10%. If you tell your friend, oh, my target for, so if you look at our model portfolio later, we started to add in target prices, and you see all our target prices are very far away from markets, right? And if you're unfamiliar with our style of trading, you'll be like, these guys are all a little bit on weed, right? They are a bit on cannabis, right? Although they don't buy the stocks, they are on cannabis, right? But this is how we view the world, right? The reason why we invest is we look for asymmetric outcomes, and you'll see later as we explain further. But so when I look for very asymmetric outcomes, I look for and I use 1 year because I'm not sure what the timeline is. So for simplicity, it could be 6 months, could be 9 months, but 1 year is just like standard. We just do 1 year, and that is the reason, right? For very asymmetric outcomes, the market consistently underpriced these wing outcomes, and I don't encourage option selling at all, right? You see what happens when you sell options with the case of GameStop. Okay, so selling options is basically trying to pick up pennies in front of a bulldozer, right? Eventually, you trip, and then that's the end of the game, right? So I try not to do that. So I only buy long-term options, and I've moved the tenor from 1 year down to 3 months to 1 month when I feel that there is a catalyst for it to move very much higher very quickly relative to market expectations. It always has to be relative to market expectations, right? Okay, feel free to interrupt with questions at any point in time, right? And so another question: do you think US? These are all questions submitted by those who answered the poll, right? Will lift sanctions on China's semiconductor industry. Nick, you want to take this?
Yeah, for semicon, I think it's going to be a tricky issue, right? Because basically the advancement in semicon tech is the only thing that is keeping the US ahead of China and from China becoming a superpower in the world, right? As basically being a laggard in technology, and specifically semicon technology. And that is why the US specifically targets Chinese semicon industry, because they are not allowed to catch up with the US, right? And it's a very dicey situation, because if you look at Taiwan, like, why is Taiwan so important to China and to US as well, right? Because US is not altruistic in the sense where they're going to defend Taiwan at all costs, right? They're defending a particular company in Taiwan, that is Taiwan Semiconductor Manufacturing, which holds the key to China catching up with the US in terms of semicon technology, right? And that is why US is very protective over Taiwan and very protective over Taiwan's semicon industry. And if you read today's daily report, Taiwan Semicon is trying to expand itself outside of Taiwan into Japan, which is a strongly US-friendly country. And they're expanding very specific technology out of Taiwan, right, which is 3D manufacturing of chips, which is the next frontier of semicon technology, right? And so I think Taiwan understands the risk, US understands the risk, and that's why they're offering very friendly jurisdictions for Taiwan to expand their semicon industry. I don't see the US lifting sanctions on China's semicon industry anytime soon. Probably they might in the future, so it is still up in the air, but it is going to be a very sensitive industry to take note of, right? Because it's geopolitically very touchy Chinese semicon tech.
Yep. So I agree with what Nick has just shared, right? And it's very important to read the news in this context, right? So if you notice, two of our webinars in a row has been about semiconductor industry, right? It's not, of course, if you read our dailies and you read our commentary, you think these guys don't have anything new to share. They're always saying the same thing, right? But you get tired of it when it's moving against us, but when it starts to move in our favor, you realize, okay, right, these were the guys who were pounding the table and all, right. Of course, like for example, now today our spirits a little bit higher because A50 is making new highs, right, Andrew? And but semiconductor is very, very critical, right? To me, of course, Nick is a strong proponent of this, and I isolate it like this because Nick is, we don't have group thing, right? Nick and I have very not very different process, but we have different process, but sometimes we arrive at the same conclusions, and sometimes the conclusions are, he will highlight something to me and I look at it, and in fact quite a few of the younger guys pointed me in this direction of semiconductor, and I realized they're absolutely right. The importance of this industry is almost unparalleled for many years. And the comparison Nick makes is the oil industry in the 1970s and the 80s, right? Where you just have no choice. You just need to have this. And everything we have that works on electricity runs on chips now, right? And if you read the news and you put this into this context, you start to realize and you see the world. So this is one of the things we promise about track record, right? Is that not just we will help you understand how the financial industry work, but also how the world works, in the sense where you start to realize not many things are not accidents, right? They try to phrase it in something in with other context, but they try to fudge it up a little bit. So you see today in our daily reports, I hope that you guys read it religiously. Nick mentioned that TSMC Taiwan is now building a facility in Japan, right? And this is not an accident, right? The previous facility they were hugely invested in is a fabrication plant in the US, right? Nick, where in the US? Somewhere in the US, I forgot the state, but they are trying. So the US is trying to get TSMC to diversify out of Taiwan, right? To places where China cannot take over, right? So in the context of this, will China lift sanctions? US has interest not to lift sanctions, but US cannot be so aggressive to Taiwan that it puts to China to such a stage where China has no choice but to say, okay, right, if I run out of semiconductors, I cannot do anything. You leave me no choice. I have to take over Taiwan right now, right? And that's China. What will do? China will blockade Taiwan, right? China will say, okay, if you are not going to sell me any semiconductor chips, you're putting me in a position where I have no choice, right? And China will say, they will justify it with the act of war, right? They're going to blockade Taiwan. So US has to tread this line where, okay, we can sanction you, we put some roadblocks in your path. We try to make you stumble a little bit. We try to slow you down. But if they cut it off completely, China will have no choice. China will. That's why you see now, U.S. is sending Navy to the Straits of Taiwan, right, to the South China Sea. Then they have airplanes flying over. They are just showing that you can try to blockade, but we are around, right? We cannot let you blockade. We won't let you blockade, right? So, yeah, Keen, yeah, very good. So basically, yes, right. It is very important right now that this is not what I wanted to show, but it is very important right now. And you read the news in this context, you'll find that there's many things happening like this, right? That US is trying to pay Taiwan, give Taiwan a lot of incentives to diversify out of Taiwan, right? Out of the island of Taiwan, build the facilities, and they are running against time, right? If China decides tomorrow, okay, we are going to play hardball, we are going to blockade Taiwan right now, then who is the one that runs out of semiconductor chips? It will be the US, right? So everybody is in a race. China is in a race to make sure that they can get all the supplies, stockpile the chips, and make sure that US has no way to because it's possible that once TSMC has diversified out of Taiwan, then they just don't need to produce in Taiwan anymore, right? It's okay, sorry, right? Then we can seriously stop China now, right? Yeah, okay, no more chips for you. So that's critical, and I want to spend more time on this in time to come.
I think
And
also on this topic, in return, China is pressing US on the rare earth front.
yes,
Because China is the biggest producer of rare earth, and that's why Australia is a very strategic common country right now at the moment because of that.
yes, correct. So that China still has a weapon, right? If US blockades Taiwan, US stops TSMC from exporting uh, uh, to 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 export to China, China can say, okay, no more rare earths for the rest of the world, right? And then immediately there's a huge bottleneck. But this is basically act of war to each economic war, and then the world will be a worse off place, right? And stock markets will collapse, and then we'll all be like run out of chips, right? You imagine using iPhone 7 for the next 5 years or something like that, right? Okay, cool. Anyway, Green, I see your question. When to add to TSMC? I think we can address this um, over over time. Maybe when the opportunity comes. So TSMC is not far from where we some of us initiate the position. So it's still, even then, it's still a good position given our time frame. In fact, what I've been doing is I have been accumulating TSMC 1 year options with the furthest out strike that you can find, and anytime the stock come off, right? Okay, so next is this. Did my keyboard die? Nick, can you click to the next stage? Okay. So again, this is a question about cryptos. For those of you who don't understand, you can buy tokens that are issued by certain companies, certain crypto companies, but it is not a stake in a company, right? There's no legal recourse. It's just basically nothing, right? Some of them are there's two types of coins, right? One is a utility token. One is a security token. So security token, they tend to have recourse. They tend to represent some ownership stake in the company or share of the revenue or something like that, right? But because they will be classified as a security, they come under security laws, and then the regulators will come after the companies for not following regulations in issuing all these things to. So you cannot sell shares without to the public without going through the whole process of transparency, right? Publishing your records and your business plans and things like that. So what we have mostly right now that are trading is mostly utility coins or governance coins. Basically, if you governance, it gives you a right to vote on how the company should proceed with the technology or proceed with the ecosystem. Utility is you have to use the coin to pay for the services. So in essence, it's a very big topic, but in short, you actually don't own anything and you buy at your own risk. Some of us have bought tokens that basically just went to zero because management or company decide to just keep all the money, and that's it, right? There's nothing you can do about it. So that's why it's a wild west. It's a cowboy town for these cryptocurrencies. Get involved at your own risk. Okay, so I answered this question on the Slack, but I will reiterate. Receive short-end rates. If you see, some of you may find this very interesting. How do you receive short-end rates in the US? So for those of you who trades in with brokers that give you Fed fund futures, so you can search for Fed fund futures. Essentially, these futures price off the effective Fed fund interest rates, which is the short-term interest rates, right? But it's you are able to basically bet on what the interest rates will be in March 2022 for the Fed fund rates over the course of a month or two or 3 months or whatever, right? So you essentially, so this is my bet that the Fed fund futures is pricing currently. I think they price It's a few basis points. I think the danger is that the system goes through a shock, and then Federal Reserve needs to ease aggressively, right? If not, nothing happens, right? Because they are not going to raise rates, so Fed fund rates are not going to move. But if something bad happens, Fed fund rates could go below negative, although they said they don't want it to go negative. So that's just one of the contingency trade in my portfolio. Uh, why do you have so many different uranium stocks in the model portfolio? Okay, so Nick, you can help explain this part.
Yeah, so because for uranium, there are a lot of deposits around the world with different companies specializing in different deposits. So of course, predominantly you have Kazakhstan as the main producer of uranium, right? So for the uranium markets, Kazakhstan is like the Saudi Arabia where they dictate most of global productions. But for Kazakhstan companies, it's a bit hard. The liquidity is not there. So most of the liquidity is in Canadian, US, and Australian producers for uranium because these are the countries that are also uranium producing countries. So for energy fuels, it is basically one of the key uranium companies in the US, right? So as the US is trying to pursue more uranium friendly future, Energy Fuels is one of the main companies that is helping them with that aspect. And also recently, Energy Fuels is also exploring rare earth, which is also what we mentioned just now. It is a key strategic asset of importance, right, for the US because rare earth is being used in everything. All semicon chips uses rare earth. Um, Most advanced military equipments have uses a huge amount of rare earths. Let's say a F-32 fighter jet uses about 950 pounds of rare earth, right? So that is a lot, and it's a matter of it's a commodity that is of national security to the U.S. government and to a lot of governments around the world. So that is going to be extremely bullish for rare earths, right? Because in 2010, if I'm not wrong, when China banned exports of rare earths to Japan, if you go look at the price of rare earth, it actually increased by almost tenfold, right? So if China were to decide to weaponize rare earth, and as the US realizes it that they cannot continue to depend on China for rare earth exports, I believe that prices are going to do very well, and there's an additional tailwind for Energy Fuels on top of its uranium, on top of its key uranium business. So for Global Atomic, they have a very high quality project in Africa, in Niger. So that is quite interesting. And also they have a zinc optionality. What that means is that they also have a mine in Turkey that is producing zinc as well, right? And this is providing cash flow for them to fund their uranium exploration in Africa, which also have very high grades of uranium. And that is why we are exposed to Global Atomic. Denison Mines is more of a safe play. It's one of the best quality Canadian miners in North America. Paladin Energy is actually one of our highest conviction uranium positions. It is actually in Australia. And what's interesting about them is they are extremely high quality uranium miner, but the market is pricing them as a junior without actual pounds in the ground, right? So the dangerous thing about investing in uranium is because you have a lot of uranium companies in the world they can choose from, right? And a lot of them are junior miners without existing deposits. So they claim that they have mines that have uranium in the ground and all these things, and the markets assign them a pretty good market cap, especially when the uranium is in the bull market. But then at the end of the day, they actually don't have it. But that is not the case of Paladin Energy, where the market is assuming that they are junior miner without any proven resource in the ground, right? But they actually do. So I think it is the most mispriced uranium company out there, and that is why we are most excited about this company. NextGen is also a sort of a uranium blue chip. Of course, the biggest blue chip is called Chemical, which is in Canada, and of course, Kazatomprom, which is also listed in London, but they don't give you the best bang for the buck. So in terms of a quality miner, I think NextGen is one of the better ones. And Encore Energy, they have a very solid management team for uranium exploration. And they also have the most comprehensive data sets for exploring uranium in Kazakhstan and also in North America. So they have had huge success before in the past where they turned a $1.7 million market cap company to 1.8 billion. So this is the same management team that came together in anticipation of a uranium bull market, and that is why they are called Encore Energy, because they are coming back for the uranium market. So that is why we are exposed to much more than one, because each of these companies have its own very distinct edge, which we think will be very evident when we see this uranium cycle kick in. Yeah.
Okay, cool. So it's interesting to note that I mean, it's important to note that although we have all six, it doesn't mean that it we have so big exposure that it becomes concentrated risk in that one sector, right? So you have to, if you cannot decide between this. So I don't have all of this in my portfolio, right? But if you cannot decide which ones, you can just evenly distribute what you want to risk for that team into all the stocks, right? And the reason, the interest, another thing to note is that, some people some people, this is something that I constantly talk about, is that people say, oh, I'm going to leave investing to when I have money, right? Then I'm going to learn about it, right? So it is imperative to always learn, although you don't have a lot of capital to allocate now, because the if you look back into history, especially of markets, right, they go through cycles, right? And for example, this Encore Energy thing, right? If you have understanding of commodity cycles, it goes through the cycles that we are currently seeing now, right? They will have a boom cycle where they are the best thing on earth, right? Like, oh, oil is the best thing on earth. It's going to $100, $150, and then because of that, everybody and his friend starts an oil mine, oil rig, right? Everybody starts drilling for oil. Everybody gets permission to export oil in wherever they can find, because it's so expensive, right? And then, of course, within a few years, there's oversupply and the thing collapses, right? Or sometimes something exogenous. So for example, for uranium was the Fukushima nuclear accident, right? Then nuclear energy became the worst thing that you can ever decide to do, right? Any government who says, oh, I'm going to start a nuclear plant, you immediately lose your votes, because you think, oh, it's right there, not so far from us, it's going to implode and it'll explode and then we're all going to die, right? So you see, then it becomes the worst thing to have, and then the price collapses. If you look at the charts, a lot of these companies, they just absolutely collapse, right? Just went from $10 to 30 cents or something like that, right? And in fact, I think Paladin Energy went from a peak above $10 to maybe 12 cents, 8 cents, something like that. And it's crazy, right? So from there, then of course time passes, and then the world rediscovers that, actually uranium is not so bad. It's probably greener than fossil fuels, right? All you need to do is to figure out how to dispose of it safely, and the technology to dispose of it safely gets better as time passes as well, right? And so in fact, so you go through cycles like this, and if you can see, this is an amazing story, right? You can turn a $1.7 million market cap company to $1.8 billion. That's 1,000 times in 30 months, right? And imagine you're given the opportunity to invest after it's gone 10x. Okay, it's gone 10x. In the next 28 months later, let's just say you can make 100 times. It's still very good, right? So if you can make 100 times, and you have, say, you have only $1,000 to invest, and you make $100,000 within 24 months, that if your savings is only 24,000, it's only $1,000, and you can make $100,000 in less than 2 years, I think, or it's roughly around 2 years, right? Because 10x probably take a few months as well, right? So I think it's a worthwhile proposition to learn how to invest, right? You don't want to be, when the cycle comes, you're like, oh yes, I'm going to start learning how to open a brokerage account now, right? By the time it starts, the cycle could be over, right? So it's very important, and this this cycle, I believe it's unprecedented, and I will talk about it in a bit as well. So, so important to note that there are a number of stocks because they all have different characteristics. They address different parts of the markets, and also we are not stock pickers, as I said before. We are not. We don't do the accounts, so we don't look through the balance sheet, and all we do rudimentary stuff, right? We're never going to be as good as an investment bank. So we are not going to come down and say, oh, Denison Mines is the best of the lot, right? It's very unlikely. We can say it's the best of the lots after it moved. Then we'll say, oh yeah, it's gone up the most. It's the best of the lot, right? So at the beginning, most of the time we'll say, okay, this is the sector. Let's find the good ones in the sector and let's weed out the bad ones. The bad ones are easy to find, but you're never going to know who is the best of the four or the three, right? So yeah, something like that. Okay. So let's go on. So this comes in a compound question. The first part of the question was how much should I allocate to each stock, or how do I do my portfolio allocation? How do we trade stocks? And then in addition to that, how much should I put aside for tactical trading? Okay. So I want to address the second part first. Okay, the tactical trading part, I think it's only it has to be correlated to how much time you have, how skillful you are in tactical trading. Or rather, I think everybody believes they're very skillful. Everybody thinks they can do it as long as they have mouse and they have something to click on. They think, okay, I'm a trader, right? That's why you can see on Reddit, Wall Street Bets have millions of people thinking they can click and then make a lot of money, right? It's making money. It's not millions of those guys in there, right? It's just some of those guys in there make a lot of money. A few of them make a lot of money. Some make some money. Most of them lost their money, right? But so this is a lesson that you should you reflect on, right? So how tactical trading requires a lot of discipline and requires a lot of attention. Right. So if you can look at the Slack chat, someone like Andrew Harris, he's always posting stuff. He spends a lot of time on trading, and he probably spends every day trading a few hours. He does spend trading a few hours. So he does a lot of tactical trades, right, to manage his portfolio. But if for someone, say for someone like Green, she has a full-time job, she runs a business, and she doesn't have time to look at a thing. So I would suggest don't tactical trade, right? You don't want to be looking at your phone during a meeting and say, oh, should I stop out here? Should I buy there? It doesn't matter, right? So the less time you have, the less resources you have to devote to this enterprise, then you should extend your time horizon, right? Because over long periods of time, I can tell you, for example, the semiconductor sector, without any changes, with the things that are currently happening in the world, with the way that we live right now, it's only going to get more valuable. It doesn't get less valuable, right? It doesn't get obsolete overnight. It's going to take years. It's going to take years for capacity to come online to fulfill our demand, right? Given that electrical vehicles, 5G phones, smart Internet of Things, fridge that can order stuff for you, fridge that can communicate with your phone, fridge that can communicate with your car, right? All these things need chips, right? And because of this, I know in the next 1 year, in the next 2 years, all these companies will become much more valuable than now. But do I know tomorrow is TSMC going to go up or go down? I have no clue, right? There's no edge in this. Next week, I'm not sure either, right? My bet is I think it goes up, but I don't know when. Okay. So tactical trading requires some kind of timing element, right? So I think this has to be a lifestyle choice that you have to make. A lot of people like to trade tactically because they like the excitement. They like to click. They like to feel the endorphin and the adrenaline as the market moves, and then you look at it. You will understand what I mean if I'm sure some of you guys have already invested in the stocks that we talk about. I think was it the day before semiconductor stocks all went out, right? I'm sure you look at it, you see all green, you feel, oh, I'm so absolutely, it feels good. Today it feels good, right? Last week everything went down, right? During GameStop, GameStop squeeze, everything went down. I'm sure you're a little bit pissed with track record and V, right? You're like, this idiot, right? He's every day telling me to buy and then it collapses. And then I'm sure when A50 was testing the support and went below, this idiot, right? He's a muppet, right? He every day says the same thing. He's telling me to buy even when it looks like it's absolutely collapsing. So that's the emotional swings that you will go through if you try to time the markets. You try to try to try to tactical trade, right? So I believe this is a choice that you should make for yourself, but it should never be more than the allocation you give to your strategic trading, okay, as opposed to tactical. Then it will be strategic, and the reason is because I there are many hedge funds professionals that have so much more resources than you, and you are basically competing against them in the short term, right? And you have no edge, right? You just don't have any edge in that. You can try to find an edge. If you find an edge, yes, for sure, go ahead, right? But I would say try to monitor your results on your short-term trades as opposed to your long-term trades, right? And then you see that, so the purpose is to make money. So you can see then what's the results and then allocate accordingly. Okay, so the next question, which is currently the question we're going to spend the most time on, how do you decide the allocation of your long-term portfolio? Okay, so first, as I said, I think we said it in our welcome video to the new members, and repeatedly said it before in some webinars, and for those who have attended our training programs, is for me it is about thematic investments, right? So the way that I see the world is there are certain themes going on, and for example, 2-3 years ago, if you guys still remember, it was a trade war going on and it's a trade deficit, right? And now there's still a trade deficit, and there's kind of still a trade war in that all the sanctions that all the tariffs that Trump imposed is still there, but no one talks about it anymore, right? You don't switch on the TV, they don't talk about the trade war. So the world goes through phases like this. Some things that are always there becomes important suddenly because of political reasons or because it's reached a critical point, right? And the purpose is to, yes, when everybody starts to talk about it, it's great, right? But it's also kind of late sometimes, right? When everybody's talking about it. So yes, the explosive move has already been priced in. So for example, for those of you who remember, if you read my dailies, you see again, this V, every day he's talking about his silver position, and it's just boring, right? It doesn't go anywhere. It goes up, it goes down. It's a heartbreak, right? All the time. It's toying with my feelings for months and months. You think if you get involved with me, not with me, with silver late in the game, after everybody has talked about it, you read Twitter, you look at read newspapers, everybody talks about silver. Every time silver goes up a few percent, the world talks about it, right? Silver, there's a short squeeze, it's going to happen. So that's when the theme is fully enforced, right? Doesn't mean it ends, it's still enforced. But because of everybody is talking about it, because it's now in the mainstream media, it becomes difficult because everybody and his neighbor who has a phone, has a handset, has bought some silver, right? Every time it goes up, they'll take some profits, right? And there's no way that it can go the way as it did in the early stage of the move. So when I say the early stage of the move, for those of you who were with us before, who got involved with us when with silver in April, May of last year, 2020, you remember when I talked about silver, everybody was talking about gold, right? Everybody's gold. Then you probably wondered, why is this guy talking about silver? It hasn't moved for the longest time. It's just an idiot thing to do, right? Why is he talking about silver all of a sudden, right? Because it was at the start of the thing. It's the start of a theme. People don't talk about it. So when, of course, the tech stocks have been going up the longest time. We have always been talking about tech stocks. When we started talking about semiconductors, it was quite early stage as well. But now you see there's more and more, even there are documentaries now, podcasts talking about how much the bottleneck is in semiconductors. And yet I don't think yet it's fully in the price. What has happened is only semiconductor space has gone up. Yes, it's kept pace with tech, but it's gone up a little bit more than tech. But soon it will develop into a full-blown thing where, since we started talking about the theme, it's become the car manufacturers don't have enough chips, right? And then they are requesting Taiwan to request TSMC to produce chips for them. Right? It's going to get more and more. So we allocate by themes, right? So we first have to identify the themes, right? But once we identify the themes, then we allocate according to the minimum size. Okay, the size is what everybody's concerned about. How much should I allocate, right? Never allocate so small that you don't care about it, right? If you put too small of a position, you don't watch it, you don't pay any attention to it, then it becomes, but the next time you look at it, you could have been down 50% and you don't know, right? But it shouldn't be so big that it hurts you so much that you cannot sleep, right? That if you find that you need to check on it every single hour of the day, then it's too much, right? It's too much. And there should be a maximum size to allocate to the theme. Coming back to the uranium theme, there were 6 stocks. You cannot put so much in each stock that as a whole, the whole thesis is that uranium becomes more valuable and it's a scarce resource and it will be priced higher, right? If that thesis fails, then all the 6 stocks are going down to like 50% lower, right? So you must imagine that's how it is, okay? So for example, just a guidance, okay? So a way to start is maybe allocate 2% of the risk of what you're willing to risk, right? If you are willing to say, okay, I'm going to do this investing game, I'm willing to lose 100% of this capital, which is, let's just say, $100, right? So you should risk at least $2 to $3 on each trade that you do, right? But when you add them up together, it shouldn't be like, oh, it's 50% of your $50 one theme and then you get destroyed, right? So you cannot be like this. So there's no science to this. It's just basic rules, and you should start small. Always start smaller than you should. So it's always better to have less risk exposure than it's not enough, right? When market is moving in your direction, it's going up, you're like, oh, I wish I had more. That is a much more acceptable problem than you have too much, right? When it's going against you. Oh, I have too much. I wish I didn't listen to the idiot, right? I didn't get involved in this. So you every time you put on a trade, you have to ask yourself this question, right? If it goes up 10% from here, how would I feel, right? And if it goes down 10% from here, how would I feel, right? And it shouldn't be, the pain shouldn't be worse, right? It should be like, okay, right? It's better to have the pain on the upside than pain on the downside, if you understand what I mean, right? So so it's better to suffer the pain of not having too much, making less money, than losing too much money, okay? So then after we have allocated, then we manage our positions by either increasing or decreasing the positions. Increase by just adding, right? Adding based on technical charts or performance, or using options. And decreasing is just calling it quits and cutting and reducing the risk by depending on our I would say performance, right? Performance, not conviction, right? It's about how the investment has performed, and also according to new information. So as new information comes out, as new news comes out, it informs us on how correct we are on our central thesis or our themes, right? As we change our views, and it's no accident performance is first, right? It doesn't matter if you think you're so right, you think you're so clever, you're the best macro trader on the face of this planet, right? If your performance is bad, right? I've seen many people lose their shirts. For example, say the GameStop guys, right? The hedge funds. What was the hedge fund? Melvin Capital. He has a brilliant thesis, right? That this is GameStop is a retail seller of why has it gone overshot? Retail seller of games, which most people stream, which most people download now, right? So they've been spending a lot of time closing down the unprofitable stores, and it's inevitable. Go to every single mall that you see, all these retail stores are getting crushed, right? So he has this fantastic thesis. This business model is an end game, right? It's going to end. And so he thought, okay, I'm going to sell this company because it's probably going to go down to zero, right? They don't make money, right? But he made a mistake of having big positions, right? And then as it goes against him, I'm sure some of these guys, they thought, this is even better value now, right? It's gone up 2x, right? Previously at 100, I think it's at $10, I think it's a sell. At $30, it's a mega sell, right? So he sells, right? So that's where you go wrong, right? When performance goes against you, it doesn't matter how convinced you are. The first thing you need to do is not to add risk, but to reduce risk, right? And this is very different from sometimes I say, okay, we buy here, and then if it goes lower, we buy more. This is already a plan, right? I plan for this. I'm not going fully invested right now. I'm doing maybe 20-35% of my position, and then if it goes lower, I increase the position size. This is my plan. It's very different from let's go fully, I buy everything, and then it goes down, I buy some more, and it goes down, I buy some more, and it goes down, I buy some more, because I'm so strong view, right? It's not like this. Okay, so performance is very important. Then after you have performance, it means that the market is starting to price in the information, right? And if you find there's new information, if there's no new information, really, there's nothing to add, right? It's just behaving as it should. But let's just say it breaks new technical levels. You see that, for example, TSMC now, when TSMC builds a plant in Japan, it confirms to me that we are right? They are very worried that China is coming for them, right? They are very worried that there's not enough chips to go around, so they need to expand capacity, right? So these things all adds up. Okay, cool. So Nick, maybe you want to show the portfolio. Oh wait, we have a question here. Never mind. Where did the question go? You guys have to interrupt me if I'm going too fast. Okay. Okay, I see answers from Green and Andrew, but there's no questions, right? It's a question. So Andrew says he does tactical trades to pay the bill, but for some of us, tactical trades are the bills. It's the bills that we pay every month to all these other traders to be involved. So if you can pay the bills with your tactical trades, then by all means, right, go ahead. So Nick, you want to explain this?
Yeah, I can explain.
Yeah. Maybe you explain it. Give me a bit of rest.
Yeah, so basically this is the track record model portfolio in a single sheet, right? So we condense everything together without the explanation. So it's a lot easier for you guys to see, I guess. So it is segregated into themes. So on the left, you can see theme 1 is infrastructure building, theme 2 is metaverse and jobs revolution, 3 is rise of Chinese economic faction, AI race, that's where all our chips are, fiat debasement, and energy renaissance. And the last one is theme 7 is the uranium and resource scarcity theme, right? That's where we have the rare earth and the uranium stocks together. So if you actually see it next to the theme, what you have is the percentage. That means how many percent we allocate to this theme, right? So this one is 10%, 10%, 20%. So you see that there are differences in allocation because there are certain themes which we have, I would say, more conviction on. It's not that the other themes that we don't have conviction. All the themes that we have, because we have conviction, but some is more conviction, and that's why we higher percentage of it, right?
Yeah.
And each theme here, we believe, is going to be instrumental in the macro trajectory going forward, and that's why we are even invested, right? And so once we identify a theme, then of course we identify the best, to us, the best assets within the team that is representative of it, right? That we think is going to do very well when these teams play out. So that is where all the assets are. So right here is the average entry price for each. So we put it there so that it's easy for you guys to reference as to if it's viable to get in, right? Based on entry price, but also viability is also dependent on the target price that we have here, because some of the stocks, like let's say if I go to uranium, the uranium counters, it seems that it has moved a lot, right? Let's say energy fuels have moved 208% since we entered. Paladin moved 204%, but relative to our eventual price target of 10 bucks, right, for Paladin and $50 for energy fuels, you can make your own judgment call that we are still very early in the trend and that it is still viable to enter. So entry price and target price should be seen together concurrently to make a fair judgment of things, right? So this is a sheet that we will update, and so it's a reference for you guys. V, you want to explain in detail?
Sorry, can I just add something? This is a new sheet that we have not made available to members yet, but we're still working on it. It's mostly done. Once it's confirmed, we will release it together with the same sheet into the model portfolio that you are seeing at the moment.
Yes.
Right.
Were you talking to me, Nick? You're asking me something. I was trying to scroll the thing, but it doesn't work again. Can you help me scroll lower a little bit? I want to see if it's correct. Yeah. So it's important to note this I think the first thing, if I see this, right, if I see this the first time, okay, these guys are superheroes, right? Everything is green, right? Everything is green. There's only 3 red squares, right? And so we didn't just cook this up out of the blue, right? These are actual trades, and some of it Nick has, some I don't have, some, and in fact, not everything that we talk about in the chat is on this sheet, right? So some of the stocks that we have from very beginning of the crisis, it's not in here, right? Zoom and Fiverr surprisingly continues to do really well. Not surprisingly, I expected it to falter, and it came back very strongly. And the reason why we don't put it in there is that actually we don't really have a price target on it, right? It's just like it's doing well. It's just keep it. So it's not much value to say to you, oh, I don't know where it's gonna go, right? And in fact, our price target is so far away from most of these things. It's really, I don't know where it's gonna go, but I just know it's gonna go up over time. Right, this is kind of the way that we invest, right? We don't do the stock analysis to find a valuation to get you where is the exact price. So if you look at the target price, they're all round numbers. It's not like investment banking target price where it's $17.5, right? Or $263. This is my price target. It's absolute nonsense, right? It's just nonsense. So what these guys do is they 263, it goes to 275, then they keep it there for the longest time, just don't want to be stupid, right? It goes to 320, then they say, oh, it's 450 my target, right? So it's kind of wasting time. So for us, it's just that we know the trajectory is that way, and market tends to overshoot. And the reason why we are talking a lot more about stocks, and the reason why most of them are green, is that the underlying theme, the theme that drives everything, is actually this fiat debasement theme, right? Which is theme number 5. But essentially, all assets are getting repriced in currencies, right? So that's why the constant refrain from us is that get out of your cash right now. When I say get out of your cash, it's not to just go out and spend money, buy your friends gifts, right? No, right? You can do that, but not really. It's just to get invested in something that is not cash, not related to cash, right? So it is just a part of the process of us trying to improve in conveying to you the way that we trade, right? It's very different. I know it's very different. It's very different from what is given in the media, where this is here, this is our price target. We don't have a price target. We just know that it's going to go up, and it tends to overshoot when the team develops. And if it doesn't, So if it doesn't, it starts to behave badly, it starts to lose money, then we'll say, okay, it's time to reduce. And we do have stocks that as not it's not in here, where in early not it's early, like mid last year, right? Somewhere mid last year, we bought some gaming stocks, right, Nick? Some
Yeah.
not gaming, some computer game stocks, right? But they didn't perform, so it's not here anymore because we say, it's just wasting our capital. It's not really performing. Then sometimes they didn't lose money, they make money, and we just got rid of it because it's not like so high conviction. It doesn't perform. So kind of like so over time you'll see us drop things out and put things in, and there will be some that we talk about, but it's still not in here because, for example, Palantir. I'm sure some of you heard of me saying I'm buying options on Palantir. I'm buying Palantir. It's not in here because we haven't talked about it in any of our forum as to why I'm buying Palantir. And if I give you the reasons, you'll find it like this guy is just. So I bought Palantir basically because it's an AI firm. Also, it's run by is founded by Peter Thiel, and I think Peter Thiel is very close to Elon Musk, so it could be the same dynamics as Tesla. And so to me, it's just like that, right? It's not something that I can expound on, but they have government contracts, they have more and more contracts, so it's something that's on the watch list, right? But it's also to it's also like there are some people who say, oh, I'm going to come in, I'm going to take this shit, and then I don't need to listen to them anymore. Of course, yes, but then you'll be missing something as well, because I talk about Palantir, it's not here, right? And I think Palantir is it's a very asymmetric bet. It can go 50% lower, but it can go 10 times in I don't know, a very short time frame. That's why I'm accumulating the options. Okay, so cool. Any questions here? What about stop loss levels? Okay, Nick, you want to handle this? What about stop loss levels?
Yeah. So we for portfolio management, we don't really have a stop loss. Our stop loss is based on a thematic level. So that is why we believe that it is important to do this in conjunction with our daily reports, right? Because what we do every day is we are constantly monitoring the narrative or the changes in the macro trajectory based on flows of information every day, right? So if information changes the theme, then we will render the entire theme void, and that's where we will close out all the positions in that particular theme, right? So we will stop out based on the changing of narrative and trajectory based on macro events, and rather than a stop loss, which is opposed to trading, right? So
yeah,
that is how we do it.
Yeah, and also, so I think this may seem very weird because the first thing that the track record trading programs is, the first thing you must know is there must be a stop loss, right? First of all, there must be a stop loss. You must have a stop loss. So you must begin with that, right? You must begin with that. And for the longest time, we are always talking with that, right? So we are talking to different groups of audience, right? So for people who understand our philosophy, it's always you must have a stop loss. But this is high level portfolio management, right? This is how it's done at the highest level. You don't come in and then say, okay, it's stop loss here, stop loss here, stop loss here. You can, of course you can. If you're uncomfortable, you must have the discipline though, right? You must have the discipline. Right? Many people don't have the discipline. They don't have a stop loss. It means it goes down, then they don't stop out, right? It's just they hope for the best and switch off the screens and then come back tomorrow and hope for the best, right? So our stop loss is it's not a level stop loss. It's a performance stop loss, right? So for example, if the markets collapse tomorrow and it starts to hurt, we will reduce across the board. If there's no themes there's no themes that's wrong, right? It just seems like it's just everything is going down, right? It's just going down. We are not going to be, we don't care, right? It doesn't matter. We're just going to reduce. If we believe that it's bad, it's going to, and that is important, right? You must learn how to reduce, right? So it's not that we don't have. So this is portfolio management stops, right? We stops based on portfolio. And the reason is like this, right? Our main, I think this is a business motto or what we call it. We say we are bringing Wall Street to Main Street, not the other way around, not Main Street to Wall Street. We are bringing Wall Street to Main Street. And some of you are very mystified as to how hedge funds can have performances that if they have stop levels on each thing, they will be stopped out quite often, right? But how is it that, and it's important to understand this, is stop loss on a portfolio level. And that's why the portfolio has many different things and it is monitored constantly. And we reduce individual components when we are wrong about individual components. We reduce across the board when we are wrong about the overall thing, but we also reduce within the teams. Right? I know it's difficult to understand. It's almost like it's an art, right? It's like, okay, he tells me this, right? And most people, I guess, during this cycle, you have yet to see me say, except for the tactical FX trades where we've been stopped out. It's unfortunate we stop out at high sometimes, or a goal you've seen. If you read my stuff, you'll be like, okay, he's getting out of goal, and it's kind of like that, right? Goal, when we initiated it in early March, until now, we've made good money, but it has not performed in recent days. And then I just say, okay, it's broken some levels and we're out of it, right? And don't talk about it anymore. You just move on from it. If you look, Nick, if you scroll down, this Fiat displacement team, right? So some of them are doing well, and you see, it's no accident that I got out of gold exposure, right? And we have this stock that is down and it's gold, right? It's just been a drag, right, on the performance of the team. So over time, we will start to reduce, and we say some parts we reduce, and it's okay to reduce when it starts to do badly, and then it starts to perform. You like it, you think it's a great use of capital once again, then you can add to it again, right? Yeah, but it's a process. I cannot. I have tried to put it all down in a sheet to tell you how it's done, but it's quite impossible. It's probably a 1 or 2 volume book if we decide to write about it. But it's much better if we show you and we talk about it on a regular basis. And it will be much better if you observe and then watch the markets as well, right? So for some of you who are new, you may think this is very hard to understand, right? But no, not really. I think if you talk to some of the people who has been in the ecosystem for some time, who happens to be the people who are vocal today, Green and Andrew Harris. So if you talk to them, they will tell you, yes, they can. After a while, it becomes I believe second nature, right? It becomes something that is hard to explain, but you can do it, right? And we showcase Green's track record in our webinar because it's quite amazing. I think she outperformed many fund managers, and she only does it part-time. Okay, with that, I believe I have come to very close to overstaying my welcome. If you have any questions, I will address your questions, and then otherwise we'll enjoy the rest of our days. Anything, Colin? You look like you have a question. You want to ask me something?
No, nothing from my side. I mean, as you know, I've been away for a while, and I'm just getting back in again.
Okay.
Very impressed with this model portfolio. That looks very, very, very good. I mean, can I just ask one question? How much is allocated to each stock? You don't have that down there, do you?
Yeah, we try. Okay, so this is a very good question, right? We try to do this. We say, okay, we allocate 2%, 3%. But the problem we face is that some of these stocks, if you look, they are up like 240%, right? And because of that, it becomes a bigger part of the portfolio.
Okay.
Right. So then do we update it to what is so along the way we will add to it as well, right? So it becomes we initially, I guess the key rule is, let's just say we all start at 2%. But as the thing starts to go in our direction, we will add to it. And we will also have the value grow. Then it becomes bigger than our portfolio, right? So it becomes not just 2% of our portfolio. It could be as big as 10% of our portfolio. And most of it could be because of the profits. And because if you look here, we've never we've never announced we have taken profits on anything this year, right? We have not, right? So if you add up, so if we put that weights in and then we add up, then you'll see our portfolio is like 320% or something like that, or 250. Then it confuse you, right? How is it 250? Because of performance, right? So we decided, okay, let's not confuse matters. We're gonna, so if you start, so if at the site here, I think at the site here, you scroll to the site, there's some ground rules on the right side, Nick, where we type to them.
It's removed.
Oh, it's removed. Okay, you should put it back so that if they are reminded. So it's like basically what I said earlier, right? Have minimum, maximum, and then it doesn't account for us increasing the position as well as P&L growth on some of the positions. So to put in context, like we always start with the same clip, right? So that we get involved and then we see what happens, right? So that's your rule should be. So if you have a 100K portfolio, you say, okay, I'm going to risk $2,000 on this stock, right? And if 2,000 on this stock, it can go down 50%. So I'm going to buy $4,000 of this stock, something like that, right?
Yeah.
So we have that kind of rule for ourselves, right? We're like, okay, we understand that we are willing to take that kind of risk, and we understand we are going to cut when it moves against us. Okay, but having said that, there are times that we also overstay our welcome, right? Because like for example, I think this gold stock where compared to all the silver where it's doing really well, this gold stock we are down on it. We should have got rid of it a long time ago. But I think, sometimes when you're doing well, that's why I said if you start to ignore things, it hangs around for a long time, right? You always have that friend that's a negative, is a drain to the whole group, but because he's hanging around with us for so long, we don't cut him out, right? Maybe you don't have, but all of us somehow have. Okay, so that's the thing.
Yeah.
And because if you see, right, because there's always a temptation to take profits, and I think some of you will see, oh, this guy, if you look at Zoom, okay, it's not here, but Zoom, if you look at the chart, it's gone from what? Nick, where's the peak of Zoom? Do you have charts on your?
Should be $400.
And where is it now? Three something, two something. Let me see on this separate screen here.
Zoom is 430. The peak was
nearly 600. Okay, they say, okay, so I don't even know off the top of my head where it is. I just know the performance, right? So I know. So when we bought Zoom, okay, we bought it early March. We bought it like what? Below 100. I think Nick bought it below. I think Nick, you bought it at 80, right? And I was a bit late. I was like close to 90 something. I think slow in execution, and we added along the way. And of course, at the peaks, nearly to 600, it looked like a hero. But when on the way down, some people will be like, oh, you should have taken, but we don't care, right? We are looking at the long term, right? But if it goes down too much, then we start to reduce, right? We don't just cut out, we start to reduce. So for example, like this, it could be as big as 10% of the original portfolio size, right? Yeah, but it's okay, right? Because your portfolio is growing, right? Against the current portfolio, it should be around like 5%, I think, something like that, right? But it's okay if your position grows from P&L, we are okay with it, right?
And so, would you add different stocks on a regular basis? I mean, would you? How much management is going into this portfolio?
Oh, it's actually very rarely. Like on a week, maybe. An average, maybe less than one trade a day, I would say, right, Nick? So what you'll see is there's flurry of activity, and then there's nothing. Then there's flurry of activity, there's nothing.
Okay.
Yeah.
Understood.
And it's probably, you can tell from our commentaries as well, much of the same is repeated almost every day, right? Like, oh, like this, nothing happens, right? But that's life, right? Nothing happens, right? If you look back upon your life, it's not every day is memorable, right? You have a few extremely memorable days. There's some memorable periods of your life, but the rest of them, you cannot recall them to save your life, right? What happened like 5 years ago? Don't know, right? Not sure, right? And that's what markets is as well. You shouldn't be like trying to over manage it, try to sell here, buy there. No, like don't waste time, right?
Yeah. Okay. Thanks very much. Thanks for that.
Okay, cool. Anyone else? Tom, anything from you? Wow, I think we've got.
No, I hit the wrong button. Sorry, V. Hey, V. How are you?
Hi. I'm good.
V, can we get a copy of this? I've seen snippets of it, but I'd like to get a copy of this and do some work and just understand these markets and each of these companies a little more.
Yes, this will be released once we perfect the format. You guys like the format? Do you have any?
Yes.
Yeah. I think we start from there, right? Because these are all new ways of sharing our thoughts. We're gonna put it into the membership group resource place, and then you guys can have a look and you have comments on how to improve. Because Felicia, who is a teacher, who was a teacher in a previous life, tells me that whatever I try to convey may not be what you guys are understanding, right? So hopefully you understand what is the things that's going behind Nick and my go inside our heads, and if you find it confusing, and we will try to improve it. So the percentage away from target is important because it tells you how ambitious we are. Yeah. We are very ambitious people. You can criticize us for many things, but not lack of ambition. Okay. Anything else? Anything else from? Yeah. That's it, Tom. Okay, cool. The rest of you with no.
Marcus sent me a question, but he did it privately to me wrongly. He asked, haven't you allocated 100% of a capital? How do you add some more by margin?
Okay, this is the Marcus, the one, my friend Marcus.
I think it says MAR, I'm not sure.
Oh, he often asks me, how is it possible that you can always be adding? I've never seen you reduce anything. Okay, so the thing is, as we said, right, it's from portfolio growth, right? As portfolio grows, you have as percentage of your account, the margin becomes more, right? So because if you read what I say this is an unprecedented cycle, right? People, okay, this is you have to take this with caution, right? I said most people should go into negative cash positions, right? Means don't be in cash. You have to be invested. And because of that, I am invested, right? So I run very close to maximum risk most of the time, right? So what happens is, let's just say if there comes a time, it hasn't yet come, let's just say there comes a time where I say, okay, we need to reduce our risk to markets because there's going to be a correction or whatever, then we most likely will just reduce across the board, or just sell the index futures to just reduce the market risk as a whole, right? So yes, it's that's why it's a very good question in that's why we cannot put weights on the allocation, right? Because if we put weights on the allocation, it becomes a very complicated affair. How does it mean that he can keep adding 2% when the 2% adds up to 200%, right? So the portfolio value changes. And also, yes, if it comes to a stage where some components become too big and then we have not enough risk capital to allocate to a new theme, we may reduce on something that we currently have. So it came close early this year, or actually late last year, and I was very close to saying, because Facebook, Google, they started to behave very badly, and there was regulation, like talks of regulation against the big tech. I thought, maybe it's time to get out of this, reduce some of this, and add to the new themes. And I thought about it. Then information that changed my mind. That M1 chip from Apple, quantum computing in research in the big four, big tech. So it's like that. So sometimes you do need to reduce on the ones that have done really well, so that you could allocate to new ones. But what I tend to do is I think most people tend to do is they tend to reduce those that have done really well to allocate to new ones or to those that are doing badly. But my preference is to reduce those that have done badly to allocate to the new ones and the ones that have done better, right? And you will talk more about this as time pass, I guess, if we start to do that. But yes, it's we are fully invested, right? Nick, your portfolio is fully invested, right? Most of the time.
Yeah.
Yeah. Okay. Anything else? Wow, there's a lot of comments, but they are just talking to each other, right, Felicia?
Yeah, I think just one last question from Shahar. If the portfolio is on margin, what is the maximum leverage you will use?
Wow, okay, Shahar, you ask very complicated questions. So I think where everybody should start is no leverage. Try no leverage first. Okay. Once you get the hang of it, then you start to increase a little bit, right? If if I tell you the leverage that I take, sometimes it will frighten you. But I trade it very disciplined when I have leverage. I use leverage only on certain instruments that I'm very prepared to cut out very quickly, right? So for example, in the crypto space, which is not here, I don't want to talk about crypto because it's so volatile. I prefer most of you to just invest, and you'll find that I run a very high leverage. But on my stock portfolio, it is fully invested, but it is it's not that high leverage. It's just I'm able to switch off the screens for a week, come back, and I'm sure my lifestyle won't change, right? Yeah, let me just say that. Of course, not. I will still read the newspapers. I will still keep in touch with my friends. Just switch off the screens means I don't have to know where things are on a day-to-day basis, but I can step away, right? But on cryptos, I sometimes I trade so much leverage that I do want to look at the screens. Okay, I think some of these concepts that I said is not easy to digest. I'm sorry for that, but in the hope of sharing, I believe I have to tell you the truth, and it may take very long time for you to understand how it's going to be, but I think it helps with sheets like this and constant conversations between us, as well as following the Slack chat, right? All right, cool. Anything else from you, Nick?
No, I think that's all.
Okay, cool. Felicia, no more questions? Should we
I
wrap
think
up?
we are good. Yep.
Okay. All right. Thank you very much, everybody. Thanks for joining.
One more thing, I'll send over the survey form for this call, and then they can do it from Slack.
Okay, very good. And just to inform you guys, today is Wednesday. I'm sure all of you know, as it is globally right now, it's Wednesday. Yeah. And on Thursday, tomorrow is Lunar New Year Eve, which we celebrate, and many people around the world do as well. So on Friday we will be off, so there's no dailies, but we'll still be in touch somehow. So for those who celebrate, Happy New Year. And for those who don't, maybe you should try to consider using the lunar calendar. It's very good. You're using a wrong calendar. But in any case, thank you very much. I hope you have a great year ahead. This has been an eventful year. And this is very significant to us because the first time we talk about the COVID crisis was Lunar New Year last year when Beijing shut down for Lunar New Year. Hopefully, this will be the last year we have social distancing. To better days ahead. Thank you for your support and for your comments, for your kind comments, some criticism as well, but it's all constructive. Thank you very much. And let's have a great year ahead together. And good luck. Thanks very much. Bye-bye. Well, I wish you happiness and good health to you and your family. Right. Thanks very much. Bye-bye.
Thank you.
Bye.
Bye. Bye.
Bye, V.
Bye.
Bye, everybody.
All right. Bye-bye. Bye, Colin.